All right, we are live. The live stream here on Gold Silver Pros channel. Welcome everybody to the channel. Hope everybody is having a fine Sunday afternoon and enjoying their Sunday. We're going to give it a few minutes for everything to load before we get into the live stream. We're going to be revisiting David Morgan's presentation back on, I want to say, June 21st, somewhere in that time range, where he and I talked about a lot of things. We talked about Basel, we talked about the gold and silver market, we talked about shortages. We're going to go back over that because he's going to be presenting for us at our upcoming Money Metals Summit here on August 19th, 20th. We'll get into that in a minute. And then I'm also going to talk about the MONEX fraud. CFTC is suing MONEX, which is a precious metals dealer, for what they claim is a $290 million fraud. We're going to be going over the court cases there and give you guys more feedback on that, because I promised you I would bring you more on the gold and silver storage programs and where they are, especially in light of what we've seen with Kitco pooled accounts and customers' expense and trouble trying to get their metal out of that. And also the problems with the Perth Mint, which we allege, according to their published and audited financial statements, that they're running a fractional reserve gold and silver scheme. So we'll get into all of that in a moment. Wanted to welcome everybody to the program. Thanks for joining. Mark Middleton, William DeVelter, Urban Sombrero. Kristen Rowe is in the house, and she'll be joining us in person in Dallas on August 19th for the Money Metal Summit. Welcome, Kristen. Stray Dog at Play. Everybody, thank you for joining the program. We have about 55 watching. We'll give it another minute or two for people to get into the stream, for YouTube to notify people, for them to get the email if they're signed up on our website, and we'll get into the content. Once again, we're going to be revisiting David Morgan's comments on what happened or what's happening with the gold and silver markets, and basically everything that is going on with those markets. Basil III, he had a lot of comments on that. We will go over that for you guys here. And I also want to get into MONEX and potentially the scheme that they're running there as well. Welcome everybody to the program. We have James David here, Silver Ripples is here, Grim Investor, Denny Fott, Munchalot are all here. Remember, guys, if you want to ask a question down below, you can enter in the chat. You can do a super chat and we will get that answered for you. I'll try to answer other questions in the chat as well. Let everybody get loaded. Thank you everybody for joining the program. All right, looks like we're doing pretty good, so we'll go ahead and get started with it. We're going to revisit the comments that David Morgan made. Before we get into that, I want to talk a little bit about our Money Metals Summit. It's coming to you virtually on August 19th and 20th. That is less than 2 weeks away. Ladies and gentlemen, you can get a free ticket here by going to the website, which is located down in the description, clicking on free virtual conference ticket and just registering. If you want to come on August 19th to our in-person event, you can come. It's going to be about $30. That will also pay for your dinner, and there will be a cash bar there if you're so inclined. You have the opportunity to watch a few hours of the conference with yours truly, to have an after-hour session from 5:30 to 7:30 Central Time with us on site at the Embassy Suites DFW north of DFW Airport, and also to join me for dinner afterwards in the restaurant there at the hotel and ask me any questions you want to ask and just kind of have fun. We've got quite a few people coming. It's going to be a small, intimate event, but that's the way we wanted it. We're going to limit it to 50 people. We may or may not get to 50 people, but that's okay. It's just for close friends and family and subscribers to the program. Wanted to go over who's going to be there. Of course, David Morgan's going to be there. We're going to talk about my recent interview with him. There's a lot of other people will be there. We've already talked about David Hunter, and his topic will be Fed caught by inflation or market crash. We're going to have several company presentations you can see throughout. We're going to have Craig Hemke talking about the history of gold market manipulation. We're going to have a private investor breakout session. If you register at the link below, at the Google form below, free of charge for the private investor breakout session, you can join us there. That will only be for people who register at the link below. If you do not register at the link below, then you cannot attend that session. We'll have conference break and giveaways. 4 conference breaks and giveaways. We're going to have the winner of the survey that I sent out. Send in your resume for the Perth Mint. Of course, it's a humorous survey. We're making fun of what's going on at the Perth Mint. I'll read the winner of that and give out some silver. We're also going to give out silver to people who provide answers in the question and answer section, live chat section of the conference. Will also be giving away some swag, some Gold Silver Pro swag, and also some free memberships to the website. where we give away a lot of research and a lot of information. Well, we provide a lot of information and research, and that's normally you have to pay for that one. David Morgan, of course, will be joining us. He's going to talk silver in the crypto world. We're going to have an experts roundtable with myself, Chris Marcus of Arcadia Economics, James Anderson of SD Bullion, and Dave Kranzler of Investment Research Dynamics, talking about a state of the union gold and silver. Where are we in gold and silver? What's going to happen to gold and silver for the rest of the year? Remember that gold and silver is in the doldrums usually June to July, typically in most years, although that doesn't always have to be the case. It is most of the time. But then the rest of the year, it rebounds and has its strong period. It's cyclical or seasonal, if you will. The Asian love trade is coming up where people buy gold for weddings and ceremonies, and that'll boost the gold price. We expect that to happen the last part of the year. We will have the Gold Room After Dark. That is the 2-hour session, aforementioned session, which if you're on site, you can join me for, have a Q&A. Also, if you log into Hopin, we'll do it virtually as well at the same time, where you can ask your questions. And if you're anybody out there in the audience, you can come on screen and ask in person if you want, or you can just stick to the chat if you wish, and we'll answer those questions. That's August 19th. That is the on-site day for everyone, regardless of how you register. August 20th is a virtual day. We'll start off with an experts roundtable on gold and silver manipulation. We will have Daniel Vigario, the CFA, who joined me on the channel to break the fractional reserve scheme of the Perth Mint by looking at their audited and published financial statements. We'll be joined by Stuart Englert, who's the author of the book Rigged, Andy Scheckman of Miles Franklin, and Andrew McGuire, whistleblower and director with Kinesis. We will also have Dezo is coming on the program to talk about the challenges with digital sound money. He has written 3 books on a version of crypto he thinks is much better than Bitcoin, that actually is rooted in actual real world value. We'll talk about that with him on the program. I think that's fascinating. We'll be joined by the producer and the director of The Money Game. The Money Game is a new financial movie that's going to come out. That's going to discuss all the problems we have in the financial sector, the financialization of the financial sector, all of the paper, in a way in which the 99% can understand, even if they don't have a finance degree. And the director and the producer will join me for a roundtable on that. That's going to be a lot of fun, guys. Don't miss that. And we're also going to have a roundtable on women in resource mining, women who work in the resource mining sector, what they see as the current issues, current pros and cons of the resource industry, what is going on. And I'll also talk about their journey as women in that sector. I'm going to go ahead and exit out and take a look. Before we get into the David Morgan piece on how everything is going in the chat, welcome everybody to the chat. Good to see new people here. Carl Warpy is here. Lucas Necht is here. Morgan Maristari, hopefully I got your name correct. John Hutch is here. John Hoffman is here. Martin Reyna. Thank you, everybody, for joining the program. Remember, super chats are open. If you want to ask me a question, I'll pay attention, and I'll try to pay attention to some other questions in the chat as much as I can. All right, looks like we're ready to go. We're going to get into the David Morgan piece. And the first thing I want to talk about, there's 3 main things that I want to bring about in this discussion with David Morgan, see how he did a couple of months later, and then preview what he's going to be talking about at the conference. So I was talking to him about shortages of precious metals, following Ed Moy's comments, the former Mint director, U.S. Mint director, about the main mints around the world running out of gold and silver, how that affects the market, especially in Revelation with mine and Daniel Vigario's work and John Adams' work on the Perth Mint. Are we in an actual metals short position? He provided his comments on that. I thought that they were very interesting. I thought that they were very timely. So I wanted to revisit those. So we're going to do that now. So we'll play it here.
We've got something we want to talk about here in a moment with regard to Russia, but I want to actually start off on the potential shortages in the market. So we had John Adams talking about potential shortages at Kitco and at the Perth Mint. We had a CFA contact us, as Daniel Vigario, who works out of the UK, who had actually audited Perth's financial statements from 2013 to 2020 right off of their published material. We did a couple of videos on it. He showed that right now they're running a net short position in the precious metals to the tune of about, I want to say almost $900 million Australian. And they've also borrowed $6.5 billion in precious metals, and that's a liability. So a tremendous amount of exposure, not only the precious metals exposure, but price exposure, price risk sitting at the Perth Mint. So we've got that, and then we've got reports, Ed Moy coming out last month saying that he thought most of the mints, the Canadian, the US, and the Perth were probably out of gold at this point, and probably, I would assume also silver. So all these reports of the big mints starting to be out. Are we in a shortage situation with the precious metals? Or do you think that there's still enough precious metals out there for anybody that has, deep enough pockets that wants to get it?
It's a real tough answer, and it's so it's going to be a long answer, so bear with me.
Okay.
First of all, I'll go to the U.S. Mint, and I put out the print that they did. The Mint put out that said there's a global silver shortage. It was underlined. I cut and pasted that, put it on my Twitter feed, and put about 5 question marks behind it, indicating I was questioning the statement. Interestingly, and I can't give out all the details for anonymity purposes, I have to, respect my sources, but I actually got a phone call from someone quite high up in the silver world that definitely knows what they're talking about, and said, I saw what you put out on Twitter, and I didn't know these people followed me, to be honest with you. And they indicated that they wouldn't retract the statement, but don't be surprised if you see an alternate statement clarifying what they put out. So from that aspect, which it did happen, the Mint basically said, look, it's really a blanks problem. It's not a silver shortage problem. And from that tiny perspective, I'd say that's true. And, I'm pretty good thinker, Robert, and not everyone agrees with me, but think about this. The annual market for silver on a mining basis is 850 million ounces annually. The Mint in a good year sells about 40 million ounces of silver eagles. So that's 5% of the market. So if you were going to do an audit, how would you weight somebody with 5% of the balance sheet versus someone with 95% of the balance sheet? Mm-hmm. I think you see my point. I'm not saying the Mint doesn't know what they're talking about, but you can hear the inference there and take it with that. Now, and I addressed this in the latest Morgan report, which I'm publishing this weekend. Not saying you have to buy it. I'm going to give you a lot of it for free right now. I have said for years, at least a decade, if not 2 decades, that if you went to the Los Angeles Coliseum and you put a red line down the 50-yard line and you put all of the claims on silver on the right side looking north and all the silver on the left side, they wouldn't match. Mm-hmm. And they wouldn't match by a very, very, very large amount. Okay. So I'm going to stay with that statement because it's true, because as I put in the Silver Manifesto, so I'm talking my book, but I'm also verifying and being consistent that there is a lot more claims on silver and or gold than there actually exists. So that's a fact. Now where it gets a little bit of a semantics game, and I don't want to play games, but is there a shortage? Well, let's look back in history and talk about a quote unquote shortage. I'll call it a deficit. I think a deficit's a better term. But from 1990 to 2006, the above ground stockpile of silver, and I'm talking 1,000-ounce bars, that's what the silver market's based on, went from 2 billion ounces down to 500 million. So in those 15 years, we had a deficit of 100 million ounces average on an annual basis. And it got sucked out of the above ground supply. So supply and demand has to meet every year. And price is supposedly going to make that happen. And we can talk about that more. Mm-hmm. So now we're down to 500 million ounces. And then the mining industry really took off in the early 2000s because of China going full bore to build out their entire nation. So from 2006 to present day, we have rebuilt the above ground stockpile of silver beyond 2 billion ounces. So if you look at it, I would say objectively, we had a deficit for 15 years. Now we've had a rebuild for 15-ish years. And so what does that mean? Well, you can have a shortage if you have an increase in supply because the demand exceeds the supply. So, think about it like a stock. And I think most of our viewers are sophisticated enough to know you could have a large cap stock, which, a multi-billion dollar company, but that's so tightly held that the float, the available amount of stock, is so tiny that any new buyers bid it higher and higher and higher. That's just true of any market. And the silver market's no different. So I think, to summarize, Robert, and I hope I'm making sense and I hope I'm helping people, because that's my wish, is that the silver market's much tighter than the price would indicate. I think and believe and can verify somewhat that the silver that is held now is held by very, very strong hands. And so again, it goes back to the float analogy, that the float on the silver supply is pretty tight. And I think the pros know it. I think the banks know it. I think the shorts know it. And so that's it. So hopefully I clarified it. I'm not trying to split hairs. I think the mint is probably not the most reliable source to look at the global picture of silver. Not that I am, but I do take into account the perspective I presented.
Okay.
So that was a really interesting comment there. Long comment by David. I let that run for about 6 or 7 minutes. He looked at all the variables on whether or not we're running essentially short of silver, and there are above ground stockpiles. Now, we are tighter than they were, say, 20 years ago, but a lot of it's moved into a lot of the depositories that typically serve the derivatives markets, even though they may not be up for trade there, and they're held in very strong hands, is one of his points. So they're not going to let their silver go unless they get a really good price for it. So it's not going to come onto the market unless silver's prices rise. So what's going to happen is we're going to continue to go into shorter term deficit. Deficit was the word they used instead of shortage, to the point at which it's going to force silver price to go up to where the available above ground stocks are going to come out into the market. I thought that was an interesting point. I don't disagree with him there at all. I do think from the retail perspective, there's a massive shortage, because at the current prices, even when price was premium, it's not pulling the available silver above ground into that market. There's a shortage. That's why there's premiums. I think it's going to take a much higher price. If you look at what the premiums were on silver, you were trading at one point like $28 silver with an $8, $7 to $8 premium, so you're like 35, 36 silver. So I think for a lot of those above ground stocks to actually come out back into the market, you're looking at least $50 silver, maybe higher. Maybe it's $100 silver. I don't know. I asked him this question, what could pull silver out into the market? And he responded. Let's go back to his video and we'll ask him that question. We'll ask him, David, what's going to pull this silver back out into the market?
So based upon past history of silver and your knowledge of it, do you think, what's it going to take to pry that silver out of hands? If we do have some stocks but it's in strong hands, is it a really higher price? Is it some sort of event in the economy? When do you think that silver starts flowing again?
Well, that's really hard. I mean, this is opinion. I think it's a combination. I think it's a wake-up call on the inflationary environment. People seek safety or something they can trust. I mean, what's more trustworthy than something that stood the test of time for thousands of years? Gold is what's going to be touted, but silver is more affordable, and people that are of modest means will rush into the silver market. So I think that's part of it. I think the other part of it is education, which people like you are doing. And then we've got the Wall Street silver crowd, which is a whole generally new generation that's woken up to the fiat money paradigm and understand that real money is reality. And this other stuff is basically a paper paradigm that you're sort of, excuse the expression, brainwashed to believe has value. So as that becomes more pervasive, and I mean, that group, that WSS group's growing at, I don't know, phenomenally. I mean, it started with 30,000 and now I think it's pushing toward 100,000. So it's education, it's inflation, it's fear, it's distrust, moving to something trusted. And then it may or may not, but most likely, in my opinion, will take some type of quote unquote an event. That will be what really is the tipping point. All
right. So what David is saying there, it's a lot of education. It's a lot of telling people what is going on with the market. It's a lot of those types of things that is going to be needed for the silver dam to break. I agree with him. I think it's going to be also the eventual shortage caused by the industrial demand and the retail demand draining the available above ground stocks. as we go along, enforcing the silver price must go higher so that we can get additional physical silver. There's only so much you can do to paper over a physical commodity market when people want the physical. So it almost doesn't matter at this point how much short paper they put in silver. It does affect the spot price, but that's the spot price of the paper market. It doesn't affect the physical supply demand fundamentals. And that's what most people don't look at. They just look at the price and they say, okay, man. They don't look at the physical supply demand fundamentals and the fact that demand is exceeding supply, that it takes 5 to 10 years to bring a new silver mine on. Most silver mines are not primary silver mines. Most silver is mined through as a byproduct of other things, which if you're mining copper and silver price goes up, you're not going to mine more copper to get silver. If it's just a byproduct credit, it doesn't make sense. So eventually all of that's going to catch up. And I think that starts to catch up. It started to catch up earlier this year on the retail side of the market. It's starting to catch up on the industrial side of the market as well. So I don't think we have long before silver's price from a physical standpoint is forced up. You're going to see higher premiums in the market and separating from the spot price. And I think that's what's going to happen. Okay, I also asked David in this interview about NSFR and Basel III and how that would affect the gold market, specifically the London unallocated gold market. He gave a very interesting answer here. So I want to go back and share the answer with you guys. Remember, super chats are open. If you want to ask me a question, hit that super chat. All right, back to the interview with David Morgan. And we're going to go to the point at which he is talking about Basel III and what's basically going on with that. And is it going to affect the market?
Help if you have any savings to not save some of it in real metal.
Yep. I want to switch topics here for a second to Basel III. I know that's been going around a lot on the internet. We've looked at it, I don't know how many times, maybe 4 or 5 times on the channel, and specifically the NSFR and how that relates to the London gold market. And Alistair McLeod's come out and said he thinks it's going to end the LBMA. I didn't know if you'd been following that sort of saga at all, and if you had an opinion on Basel III. Do you think it's going to change things in terms of the power centers in the gold market, or what effect do you think that could have?
Yeah, I mean, at the risk of looking, wrong and maybe even dumb, I did read it, and then I got with people that also read it that I trust. And I personally, first of all, I don't know. So let's just be crystal clear. I don't know. Okay. After reading it, I think it's going to knock some of the players out of the game. So the trading desk for some of these banks will be like Scotia. They'll just say, hey, we're done. We're not going to trade gold anymore. But I don't think it's going to have a massive effect on the price. I think the market's already built it in. And I don't think it's going to cause a great deal of consternation in the unallocated accounts. So I could be wrong, but I've read it. Again, I've talked to 2 people that are pretty high up in the world in the precious metals that basically verified how I interpreted what I'd read. And so what remains to be determined, we'll find out, by the end of June. And the one area I do have to comment on further, Rob, is I don't really see how it spills over in the silver market. I mean, it's making gold a tier 1 asset. Silver isn't in this at all. And the problem with the silver market is it's bulky relative to gold.
All right, we're going to stop it there. David had several good points that I wanted to address. Remember, super chats are open, guys. If you want to ask a question, I'll answer it. So David said a bunch of things, and this is back on June 7th. So it was a couple of 3 weeks away before the implementation of NSFR to the gold market as a part of Basel III around the world, with the exception of London. We'll get into that in a moment. And he was right. We didn't see a big price explosion. We didn't see the London derivative market explode at the end of June, beginning of July, as many had predicted. Many were wrong there. I've had people come on my program and say they thought it was going to, fundamentally change the market right away. And I disagreed. I'm mostly in line with David's comments for the most part. And I do have one additional comment I want to make. After I, got through 6 videos on Basel III, I think we've done 6 now on the channel, dating back to, I don't know, late last year. I decided that what NSFR and Basel III was to help the banks better capitalize themselves with certain types of quality assets. But specifically with regard to the gold market, it was designed to remove London as a center of the gold market and to break up that sort of London, Chicago Mercantile Exchange chokehold on the gold market pricing scheme that they had, and distribute it to other powers. And those other powers, I think, are the BIS in Europe, and I also think China, which is rising. China is now having a much bigger role in the SDR, the IMF, the BIS, and all things financial worldwide. And I think power is clearly shifting east as far as Europe from the UK, and also real far east over to China and some of the Asian nations. I also think some of the Middle Eastern nations are starting to make some noise, especially Dubai, and stepping up and not being bullied by the LBMA. So what has happened though in London, the reason why it hasn't affected London right away, any effect that it might have had, like David said, it may cost some banks to exit the market, was because London basically said, we're not going to implement it until January 1st. And then the regulator came out of the London Go market and basically said, well, we're going to exempt physical transactions. Now, they didn't exempt loans and leases, but they exempted the physical transactions in the OTC market. My question is, does that exempt all the derivative transactions? Because the derivative transactions by nature aren't physical. There is physical settlement and delivery and those types of things, but not all those transactions are built upon it. So I think there's a lot of questions to be answered. It's kind of a very vague interpretation of NSFR by the regulatory authority there in London. But I do think there's still some questions to answer. But regardless, we won't see anything happen there until basically January timeframe, and then maybe even longer. So I think what has happened was the world wants to pull control of the gold market out of London's hands. London is fighting it. London was not going to go quietly into the night. They weren't just going to allow it to happen. That's not realistic. The powers that be there want to maintain control. They're screaming around trying to figure out what to do. I think eventually some of the control is going to be wrested, because eventually the rest of the gold market is not going to trade there. I mean, it's voluntary to go to London and trade. Now, London has had a chokehold on trade and pricing for so long, hundreds of years. But the rest of the world can build their own gold markets, and they have been building their own gold markets. And so they can eventually wrest control out of London. So just the fact that they implemented the NSFR regulations in Basel III means that the rest of the world's ready to move on. They're ready to move on from London, but it's going to take time. This is not something that's going to happen overnight. I think David was right there. One thing David said about silver was he didn't see how it affected silver. And it doesn't directly, because silver is not part of Basel III as far as I can tell. I've read through it, especially NSFR specifically. But what happens is those four big bullion banks that trade on the London market trade not only gold, but they trade silver, platinum, and palladium as well. So it could affect them. If they had to drop out for any reason in the London OTC market as a result of Basel III, you would have less banks also then trading silver, platinum, and palladium, because they're going to have to pull completely out, right? So it would affect silver, platinum, palladium as a second order effect, as an indirect effect, maybe not a direct effect. So I agree with David there, but it could have some add-on effects later on to those other precious metals if one of those banks has to pull out, because it'd just be less liquidity available on those derivatives trades. All right, there's still questions to be answered on Basel III, but again, I think long-term, it is a movement in power away from London as a center of the gold market to the rest of the world. They want to globalize that gold market to have better control of it. I don't think that's necessarily good for you and me in terms of pricing, because there's still going to be a derivative complex on top of it. It's just going to be done by different people. So we're going to have to watch and see what happens there and see how that affects gold price. I do think that eventually gold and silver are going to be allowed to rise, especially when the banks are ready to, when we go through the next financial crisis and they're going to recapitalize their balance sheets. It makes sense then to revalue gold specifically to allow it to rise, because it's going to strengthen their balance sheet. And remember, the central banks have been buying gold hand over fist since 2011, about 11 years. So, that's an important thing to note. So Basel III will make waves around the world. It's going to take time. It wasn't an immediate effect. I think David was right there. So I wanted to thank David for his comments. It was a great interview. Go back and watch that interview, guys. It was done on June 7th on my channel. If you're interested in David's comments, I think he did an excellent job. He will be at the conference again, talking about silver in a crypto world. So please join us at the conference, August 19th and 20th. And you can see David there. He will be presenting. And again, you can go here. The link is down in the description. You can register for free for 2 days. Just do the virtual conference ticket. It only costs a little bit of money if you want to come in person on the 19th. If you want to view it from your computer at the comfort of your home anywhere in the world, you can go for free. So you have two options. All right. Quick message from one of our sponsors. Go Gold has a news release on July 28th about some drill results. I'm going to read that out for those of you in my audience that like the mining stocks. A lot of you do like the mining stocks. I get tons of email about the mining stocks, so I do cover it on the channel. Go Gold here says they're pleased to release the results of 5 new drill holes from the El Favor deposit and the Los Ricos North project. Remember, Go Gold is a producer. They're not an exploration company, but they do explore to increase their resource. Drill hole LRGF 21052 intersected 51.3 meters of 136 gram per ton silver equivalent. That's silver plus other stuff, and you'll see what that other stuff here is here in a moment. So here are some of their drill hole intersections. You can see that they're getting really good amounts of silver, 112.8 all the way up to 1,367.2 grams per ton, and gold from 136.3 all the way to 1,576 grams per ton, which is, I'm sorry, that's silver. I'm sorry, 0.31 gold up to 9.63 I see here as the high. So both gold and silver very good in each of these drill holes by themselves. They have both of it. And as you can see on the map of El Favor, how they're drilling out the resource and all the finds they've had. They're really working El Favor, and it's providing them a lot of additional resource. So if you're interested in a producer that continues to add to the resource, Go Gold may be of interest to you. It trades on the TSX, the Toronto Stock Exchange, under GGD, on the OTCQX here in the US under GLGDF. All right, next we're going to be talking about MONEX. Now, MONEX is an interesting situation because it's a gold and silver provider, and the CFTC is suing them. And they started this in 2017, and they're continuing it. And we're going to get into that because we've seen so many schemes in the precious metal space over gold and silver storage that come in every possible shape and size. We want to cover those for you on the channel. Thank you to Urban Sombrero with the super chat. And he says, hi, Rob, appreciate your insight. Good buying opportunity this week. Would you lean towards silver rather than gold accumulation at present? Okay, Urban Sombrero, my view on this is I've always gone 50% gold and silver. And then I've got, and that's not including numismatics. So if you look at my portfolio, it's about 35% numismatics and the rest 50-50 regular gold, silver bullion. That's the way I do it. I'm not saying that's the way everybody else should do it. You should make your own decisions, do your own research, maybe contact your financial advisor. That's my disclaimer. You know, don't listen to me other than just for my opinion, for my case. But I think gold and silver are both going to do well. Silver, I think, especially looking historically and at current supply demand fundamentals, is much more undervalued than gold. So it has much higher ceiling potential, but it also has a much lower floor potential because there are interests in the world in keeping silver cheap so they can build technology, essentially. And I won't go too much in detail on that, but I think silver, the silver price can stay irrational longer. You can stay solvent, we'll say that. So gold, use some gold to counterbalance that. Gold's going to grow first before silver does. But when silver finally goes up, it's going to be explosive if history is any indication, and if the current price charts are any indication, and if the current inflation adjusted prices are any indication, all of that is going to occur. Thank you, Urban Sabro, so much for the question. Everybody else, if you have a question, do the super chats below and I will answer your question. We've got a lot of people in. Quaalude Charlie is here. Kristen Rowe is here. Lots of people here in the chat. Appreciate you guys. Are about 200 people in the chat. That's a good healthy amount. We're going to get into MONEX. What about MONEX, you say, Rob? What is so special about MONEX? Well, we have this article from September 6, 2017, where all of this started. I'm going to read it to you. Today, the CFTC finally announced it has charged MONEX Deposit Company, its affiliates and the principals, Louis Carabini and Michael Carabini, with a massive fraudulent precious metal scheme. This charges refer to MONEX's Atlas program, where customers put down 22 to 25% to buy gold and silver, financing the rest at a variable rate of interest. So you might pay $10,000 to buy 40,000 of metal, losing $1,770 each year of metal and interest, which is not great. That's a lot of interest to pay on partially bought metal, which, by the way, you'll see in a minute, you don't control. The complaint alleges there are about 12,000 customers who realized over $290 million in losses from July 16, 2011 to March 31st, 2017, averaging over 24,000 losses per customer, and that about 90% of Atlas accounts lost money. During this time, about 140,000 trades were made. There's a couple of reasons why Atlas accounts lost money in that time frame, because gold and silver hit a high in, I think it was like September maybe of 2011, somewhere in that range, and then they fell to 2017. So you're losing on the price, plus you're paying all that interest, 1,770 of metal each a year in interest. The CFTC said that Dodd-Frank makes it illegal to offer or enter into leveraged commodity transactions with retail customers unless the transactions are conducted on a regulated derivatives exchange, among other requirements. So this has brought the CFTC in play here with the MONEX, and that's never a good thing when the CFTC gets involved with you. Let's continue on. The charges state that if customers' equity, the value of their portfolio minus what they owe, goes below 7%, the position is automatically liquidated. Of the 12,000 accounts, 3,000 were subject to a margin call, and at least 1,850 had trading positions forced liquidated. Wow! So MONEX is basically taking these people's money. The metal, as you'll find out, is stored in a depository. The customers cannot control it. They cannot take physical delivery of any shape or form. They take a loan on 75% of it, which guarantees are going to have a loss every year. They bought it at a time which the metals were basically moving down. It was the end of that big cycle leading up to the 2011 highs. And all of these things cause people basically to get margin called out or to lose their positions, or at least lose a lot of money on the trade. According to the CFTC, the spread generated about $95 million for MONEX during the 2012-27 time period. Interest generated $57 million, commissions generated $14 million, and service fees generated $6.4 million. Can you imagine $6.4 million of service fees? Good God, they're making money hand over fist. Was this beneficial to the customers, or was it beneficial to MONEX? In one case, a 77-year-old man invested his life savings of $400,000 in August 2009, only to be told in 2013 that things had gone crazy in the metals market. He did not realize he was trading on margin, only to get back $8,900. The man lost $391,100 on this scheme. Over 290 million lost in total. So recently, on July 22nd, we have an update on this case from the CFTC's website. That's when I want to bring it to you. This is not just from 2017. There's more. It says here, the Commodity Future Trading Commission today announced that the U.S. Court of Appeals for the Ninth Circuit affirmed a preliminary injunction in the CFTC's anti-fraud enforcement action against MONEX Deposit Company and its affiliated companies and principals on July 20th. Let's make this a little bit bigger for you guys so you can see it. Here we go. At issue was a district's court order prohibiting MONEX from operating its Atlas program, effectively shutting down the defendant's unregistered trading platform for leveraged retail precious metals transactions, enjoying an alleged nationwide fraud. We are pleased with the Ninth Court's decision, which reaffirms important protections established by Congress, so on and so forth. Case background. So let's get into some of the background, the details, and I'm going to break this down in certain detail for you because it's interesting to see here some of the terms used and why you should pay attention to where you're storing your metals. It's extremely important. And whatever scheme you get into, you have to do your own homework. You must ask questions. You must read the paperwork. And if you don't like it, stay out of it. That's my recommendation. So it says here, the CFTC's enforcement action filed in 2017. That would be the aforementioned article that I talked about over here. Charges the defendants with defrauding thousands of retail customers out of hundreds of millions of dollars while executing thousands of illegal off-exchange leveraged commodities transactions. So what they're saying is this became a futures position or a derivatives position. And this is what the CFTC is alleging. And therefore, it came under Dodd-Frank rules. And the court was supporting them in that. The Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010 requires that such trading be conducted on a regulated exchange and that the offender be registered with the CFTC in accordance to the Commodities Exchange Act and CFTC regulations. In its continuing litigation, the CFTC seeks disgorgement of ill-gotten gains, restitution of the benefit defrauded customers, civil monetary penalties, permanently registration and trading bans, and permanent injunction for future violations. So they want them to give the money back. They want them to pay fines and fees. Disgorgement of ill-gotten gains, meaning claw it all back, and then a permanent injunction against them for violations of CFTC laws. So very interesting. We're getting into another article by Reed Smith talking about this, implications of the CFTC versus MONEX decision for trades in commodities and crypto assets. Now, two things. It's going to affect the gold and silver storage market and the derivatives market. It's also going to affect crypto assets. Why? Because there are crypto asset schemes out there just like this scheme in precious metals. Okay, remember, it's not just the asset you own. It's how the hell you own it. It's not just if you have gold, silver, or crypto, or land, or real estate, or whatever. It's how you own it. It's the vehicle wrapped around it. So it doesn't matter that you just own gold. Okay, it matters how you own gold. All right, here we go. On July 25th, 2019, the CFTC versus MONEX Credit Company, U.S. Court of Appeals for the Ninth Circuit reversed the district court dismissal of the CFTC enforcement action against MONEX. In summary, the broad implications of the MONEX decision are custodians of commodities must take greater care to ensure that actual delivery has occurred for purpose of the 28-day exception. Let me explain that. One of the things that MONEX did was they made a book entry in the system to avoid this whole thing and said that they delivered the metals. They never actually physically delivered the metals to people. Why? Because they were trading on margin. They were taking a loan. MONEX wasn't going to deliver that until they paid it. So they made a book entry that they quote unquote delivered it, but they didn't physically deliver it. And what's happening here is the CFTC is saying in order to avoid these futures regulations, you would have to actually have physically delivered it, and you didn't do that. So therefore it was a derivative. And there's a 28-day exception or basically grace period for all that to occur. And it says here a mere book entry is not sufficient, but that's what MONEX had done. Owners of commodities must at least have some minimal control of the asset to satisfy actual delivery. The people that got into the scheme had zero control over the physical asset, zero control. They got a loan for assets they didn't actually control or physically have. They got charged ridiculous interest rates. They got margin called and they got stopped out. They were using gold and silver to run basically a scam or a scheme on these people. and using that as basically leverage, as leverage or as an asset to a financial derivative scheme that was designed, set up to take these people's money. It also says it remains to be seen how the MONEX decision will apply to actual delivery of crypto assets, given the CFTC's prior interpretation, because this would affect the crypto asset market. And believe it or not, if you go down into the rest of this article at Reed Smith, it talks about how they have similar schemes in the crypto assets. The CFTC will probably follow the SEC's body of law under Section 10B, prohibit, manipulate, and fraudulent practices. So they're going after MONEX. The SEC will go after MONEX. The CFTC will likely pursue manipulation or fraud claims under CEA section. So this is all very interesting. Delivery defined, Dodd-Frank Act, you have to actually deliver. All of this stuff is in here. Deceptive and manipulative advice, there's also language around, was this either deceptive or manipulative? It didn't necessarily have to manipulate the market, but it was just deceptive to its consumers. So from a legal perspective, it violated all sorts of the Dodd-Frank positions, and that wasn't something that the CFTC took too kindly to. So they're wanting to put a stop to it. So if you owned gold this way through MONEX, the CFTC lawsuit is likely going to help you claw back some of your losses. So pay attention to that. It's good that the CFTC is doing something good here. Now, I think they're doing it for a couple of reasons. One, they're trying to protect their own regulation of the markets. They don't want other people running these schemes that they run. Okay. But two, it's good because it does protect the consumers. All right. All right. Thank you, Plumber Stacker. Says, hey, never followed here. Love your videos. Yeah, for the information. Thank you so much, Plumber Stacker. If you have a question, throw it in the chat and I'll try to answer it. But I appreciate your contribution. Remember, super chats are open, guys. If you have questions, I'll be happy to answer them. So there is the whole MONEX scheme. Again, when you're owning precious metals, be careful. We talked about the Kitco pool. We've talked about Perth Mint and allocated in the derivative fractional reserve gold and silver scheme they have running by looking at audited financial statements and putting all of that out. And now we've looked at MONEX. We've looked at a lot of these. As we continue to see these schemes, we'll report on them. We'll make you aware. We'll warn you about them. We'll educate you about them so that you can understand what your rights are and just stay away from this type of stuff because it's dangerous. Guys, it is just dangerous. We don't want you to get caught up in that. Certainly something to the saying that if you don't hold it, you don't own it. All right, we want to go back for a second to the conference. Just to remember, we have it on the 19th and 20th. It is completely free. If you attend virtually, you do not have to show up in person. No cost, no travel if you do a virtual conference ticket. Only a cost if you come to the first day in person on the 19th in Dallas at the NBC Suites. Only in that case. If you don't want to do that, and most people are not, you can come to the conference for free virtually. The link is below. If you want to join the private investor session, for those of you that like to invest in stocks, and also a way that you can invest in the movie The Money Game as well, come to the private investor session, but only if you click the second link below, which leads you to that sign up on the Google form. Again, David Morgan, who we reviewed our June 7th interview, is going to be here at the summit. He's going to be here talking about silver in a crypto world, August 19th, 2:30 to 3 p.m. We will do more of these preview videos with some of the people that we have interviewed as of late that are going to be at the conference, and we'll bring more information and research to you guys. I don't see any more questions here. Thank you guys so much for joining the live stream. I've got more video work to do and more research to do, so I'm going to break off. Thank you so much for joining. Thank you, Silverfan21. Thank you, Rusty Bent Hammer. Thank you, Stray Dog at Play. Thank you, Kristen, for joining us. Wide Winger, GT Big Hair, Mark Mickelson, everybody that was in the chat. We appreciate you. Remember to subscribe, hit the bell for notifications, go to our website and click on the newsletter link for free email notifications when we have new content as well. And stay tuned, August 19th and 20th, Muddy Metal Summit, 2nd edition, coming to a computer near you. Thanks, guys. See you next time.